In terms of the structures of our funds, we are investing in Spezialfund structure regulated by the Bundesaufsichtsamt, and that's why our maximum LTV is 50%, and we can't go any higher. So typically on the retail fund we try to get quite close to this 50%, but have it floating at around about 45% when we go into the market. I can share the view about the market players, because a typical fund doesn't have a 10 years or longer perspective that maybe a family office would have, or other investors. Our funds are likely to fix their debt between 5 and 7 years. It is non-amortizing funds, so that's also a special characteristic of that fund structure. And due to the fact that we have long leases, new or newly refurbished properties, we don't see any scarcity of providers. The sectors that are most active are the Sparkassen or Sparkassen-related banks, or the Volksbanken sector. Also with DG Hyp, for example, as maybe the most expensive or expanding, not expensive. Sorry, a bank this year. So there's a good competition between the banks. It's a healthy market from our perspective, and but once you go higher with LTVs, with different fund structures, Luxembourg structures, or Guernsey or Jersey funds that we used to run, of course, becomes much lighter. And if we look at our European colleagues in the offices in Madrid and Italy, you don't see many smiles there with 400 basis points margins. And despite the fact that I also very much believed in opportunities there, but in terms of a sign-off from investors, it hasn't been possible. But to buy, for example, in Madrid, a high street property with Tiffany as a main tenant for 15 years at 6.5% cap rate, I think that's a deal that from my glasses as a property investment is very attractive, and I would like to see more opportunities to do that deals, but we can't do them in our conservative environment.